good, all my trader and investor homies? It's your boy Kevin. This is Touchdown Trades. In today's video, we're going to be talking about a stock market bubble. Is the stock market in a bubble? Is it about to pop? Are we about to see a stock market crash? There's been a lot of chatter, a lot of talk over social media over the last couple of weeks that the stock market is in a bubble. We're about to see the next stock market crash, and everybody started panicking when the stock market pulled back just a few percent. So if the stock market does start to really sell off, we are going to see tons of panicking. We are going to see tons of selling. So in today's video, we're going to talk about what a bubble is. Are we currently experiencing a stock market bubble? Are we going to see a stock market crash in the near future? And how can we prepare for it in order to capitalize from a pullback in the overall stock market and make some money? If you're new to the channel, do me a favor and hit that subscribe button and turn on those notification bells. If you want to weather the next stock market bubble, the next stock market crash with a group of experienced traders, join the Patreon, link in the description below. Right now is the best time to join because you get charged on the first day of the month. So you're basically getting a whole month for free if you join right now. All right, so what is a stock market bubble? A bubble occurs in any financial market when the market participants, or in this case, your average trader and investor, run up the prices of these stocks higher than they're actually worth. When a stock's price runs up more than it's actually worth, that stock is experiencing a bubble, and the stock market never lies. Have you ever heard that saying, the ball never lies when you're shooting baskets? Well, Kobe, because the stock market never lies, and stocks always pull back or go up to where they are supposed to be trading at. It may not be trading at a right valuation today, but tomorrow it probably will be. So in this case, we can use the dot-com bubble of the early 2000s as an example. Everybody was buying into tech stocks because everybody knew the internet was the future. But the hype was so much, the FOMO was real, and investors drove these stocks way above their real value, and a lot of these companies were not even real companies. Anything related to the internet ran up a few $100%, and eventually investors realized this wasn't going to work out, that a lot of these companies were trash, and the bubble burst, and the entire NASDAQ fell by more than 50%. Most of these internet stocks went out of business. A lot of these companies are still great companies, and if you would have held on, you'd be up tons of money. But how can you hold on when you're buying at the highs and then the stock drops by 50 or 60%? It's very hard to do. In recent years, we saw the Bitcoin bubble. A couple years ago, Bitcoin went to the moon and topped, what was it, $20,000 per Bitcoin. And eventually, Bitcoin dropped. I think it dropped by more than 80%. That was a bubble. However, Bitcoin has rallied. Just because the bubble pops doesn't mean whatever commodity you're talking about won't rebound. So are we experiencing a bubble right now in the stock market? The answer is absolutely 100% yes. We are in a bubble. There are a ton of companies out there that have no business trading at their current price. Any stock, any company that came out with a press release saying they were going to get involved in EV, that stock went to the moon. Now, you guys know I love EV. I'm a big investor in EV and clean energy, renewable energy companies. But there's a ton of companies that have came out with bogus news releases saying that they're getting involved with EV or renewables just to capture the hype. And it's worked. And we see a bunch of trash companies go to the moon. The next stock market bubble burst is gonna pop harder than a Cardi B video, mark my word. Another great example of this is what happened to CCIV and Lucid Motors. If you step back and look at it from a distance, I never bought the stock, so I'm not emotionally attached to it. I know a lot of people love the company, and it has nothing to do with the company, but just look at the situation that CCIV and Lucid Motors was in. We had a SPAC merging with an EV company, right? So you already have hype because it's EV. We had no idea what the valuation was going to be. No clue what the valuation was going to be. We had no idea if the merger was even going to be confirmed. Investors jumped on the hype. They jumped on the FOMO. They didn't want to miss out in case it went to the moon. Well, it did indeed make it a few 100% move higher, and a lot of people made money. If you had the idea that you're gonna buy before the merger announcement and sell right before the merger announcement, then you made money. But most people who bought high, they didn't sell because greed is real in a bubble situation. And what happened? The merger was announced, which was supposed to be good news, but instead the valuation came back a little bit different. Not a little bit different, actually, like double the valuation that we initially anticipated. And the stock fell off a cliff and a lot of people got hurt. That is the danger of FOMO. That is the danger of hype. That is the kind of stock market that we are experiencing today. Another example of this is I did a video on IDEX, Ideonomics, a couple days ago. It's a stock that I like, a company I like long term. They are getting involved in a bunch of emerging markets. Sure, they have a little bit of hype involved with the stock, but I like the company. And I put a price target on my video of $8 per share, which is more than 100% higher than where it's trading today. And there were a ton of people in the comments section saying, what are you talking about? $8? This thing's gonna be trading at $50 per share in just a year. And that wasn't just one person, that was multiple people in the comment section. And I don't think people realize why even they're buying stocks. I don't think they realize how to value companies. $50 per share is like a 1,500% move. If you're buying a stock looking for a 1,500% move in a year, you are greedy. And there's a saying in the stock market, bulls and bears both make money and pigs get slaughtered. And what that means is if you're greedy in a situation like we're experiencing today, where every stock just keeps going up, 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 and you don't peel anything off the table, you're going to end up in a lot of trouble. People are going to make money shorting the market on the way down. Tons of people have made money buying the market on the way up. But if you can't take anything off the table and respect what the market's giving you, you're going to end up getting hurt. All right, let's talk about why I believe the current market is in a bubble that is about to pop. We have a perfect storm brewing. It's like a concoction of the stock market gods saying, buy more now. And they're just trying to lure you in, and then it's gonna, number one, we have overinflated stock prices, not just in growth companies. We also what happened in the last couple of weeks with growth stocks. But the entire market is expensive right now. Even your big blue chip stocks like Apple, Facebook, Netflix, they're expensive. Salesforce, all these great companies are going to be really good long-term investments, but they're expensive right now. And I do think there needs to be a correction. There needs to be a relaxing period, a cooling off before we make the next move higher. It seems like we forgot that the Rona even existed. We still have extremely high unemployment rates. The economy is still on thin ice, and the stock market somehow is trading at all-time highs. How is this happening? Because the government, the Federal Reserve, they're propping up the economy with both hands. And they're printing money left and right, which is not good. The M1 money supply chart looks like a penny stock chart. The M1 money supply measures the amount of cash, and it's gone to the moon. Number two, I think the real estate market is looking really sketchy right now too. Grandmama once told me, Kevin, they don't make real estate no more, so you need to put your money in real estate. Well, Grandmama never told a lie in her whole life, but the housing market prices are insane right now too, and the banks are issuing adjustable rate mortgages again, which is just absolute stupidity. People are buying houses they can't afford once again. Interest rates are at all-time lows, and the Fed is going to have to start jacking up interest rates in order to prevent runaway inflation. What is this going to create? These people buying houses with adjustable rate mortgages at very low introductory rates. Once those rates start to climb, they're not going to be able to afford those houses anymore, and we're going to see foreclosures go through the roof. This combined with the fact that commercial real estate is also in big trouble. These big office complexes that were once thriving before the Rhinoceros Rex, now these big office complexes are empty. People are working from home, telecommuting, and it's just not a good look. I think those office complexes are in big trouble, and people never go back to work in them, and a lot of them shut down forever. That's leaving us in a predicament, a big predicament. You have commercial real estate in trouble. You have residential real estate in trouble. I think both of those are trading at prices that are way too high. And I think we see a pullback in real estate as well. So once that happens, it's going to be an ugly look for the overall market. Not only the real estate market, but the stock market as well. The fourth reason I think we're in a bubble, look at the reaction of your retail investors and traders on the last minute pullback we saw in the stock market. I think it's great that people, your average Joe, has access to the stock market. I think that's great. Brokers like Robinhood, Webull, TD Ameritrade have done wonders to open the door for people like me and you to get involved with the stock market. But it's also breeding trouble. People don't know what they're doing. People don't know how to invest and make money long term. Last week when the stock market pulled back barely any, people were panicking out of their positions and the stock market was just down a couple percent. That should have been a buying opportunity. That was a buy the dip scenario, not a sell the dip. You want to be buying the dip and selling the rip, not buying the rip and selling the dip. And I'm scared a lot of new traders and investors are doing the opposite. They're going to be buying high. When the market drops at all, they're going to panic out and we're going to see that bubble pop and the stock market go into correction mode. Now, I hope I'm wrong. I hope we don't see that in 2021, but I just smell too many ingredients cooking up in the kitchen, and I think it's likely we see a correction in 2021. We have all-time high stock market prices. We have all-time high real estate prices. But the underlying economy really isn't that good if you think about it. Plus, interest rates are about to start rising. Real estate is sketchy to say the least. It's just too much coming together at one time for me not to think there's a bubble about to pop. So what do? Do we sell out of our positions, run for the hills, hide, get in the bed, cover your head over, pull the blanket over your head and hide? Hell no. We ain't ever scared. Scared money don't make money. Long-term investing, the key to long-term investing, in my opinion, is scaling into your positions as the market drops. You cannot pick the bottom. So everybody says, I'm just going to keep cash on the sidelines and I'm going to wait for the crash. And then I'm going to throw all that cash in the stock market and I'm going to get rich. Well, that's easier said than done. Hindsight is 2020. It's almost impossible to pick the bottom of the crash, and most people will miss out on some great returns. The strategy that I like to use is when the market starts to pull back, every week or every month you add a certain amount of money all the way down, and then when the market pulls back up, you have a good average cost on a lot of good stocks that you bought at really good deals. All right, all my trader and investor homies, that's gonna wrap up this video. I didn't mean to be all negative and negative Nancy and depressive and gloomy and predicting a stock market crash and a bubble popping and all that nonsense. But if you do look into it, it is looking more and more like these inflated stock market prices are not going to be sustainable, and it's going to have to happen eventually, and I want to be ready to capitalize on it when it does. I love all of you guys. I'll catch you guys in the next video. Until next time, peace.
It's not a game, it's a rich thing.